Hey, good morning. Welcome back to another pre-market report. This is Franco with Trading Futures Live. We'll go over different assets that I review before the market opens so I can have prepared my strategy for today. So without further ado, let's go over our schedule today. So we're gonna review the economic news. I like every day check on the dollar index. Then we'll be reviewing the bond yields, and this is a very important chart. I think this chart is very scary, at least to me. Then if you go to the VIX, you say, all right, things are not very bad. Then we'll go over crude oil and metals real quick. Then I'll review the ES and Q and RTY, and then a little bit of the chart of Apple. Okay, because Apple always influences a lot of the broad market. All right, so let's get rid of this schedule and let's go over the economic news. We do not have too much today. We did have today. Okay, we did have some building permits and housing numbers, but they are not very impactful to the market. Like building permits, it says 3 stars, like red folders. Actually came lower than expected. Then we have Red Book in 6 minutes. And then we have a couple of ECB speakers. We have Lagarde speaking at 1. So we have to be paying attention to this, okay? Because she will move the euro, and the euro will move the dollar. And we'll have some movement here in the... Good morning to all. Welcome to another pre-market report. If I don't see your messages, it's because I'm here watching the main screen. Okay, just put it there, and if you need if you have any question, I'll just answer it later. Okay, so this is what we are going to see today. We don't have but the Red Book, and then after that we have basically clear up to 11:45, not high impactful, then 1 p.m. With Lagarde. Okay, let's go over the DXY, which is the dollar index, and very interesting because I do have an alert set there, and it's right now being crossed. So let me get rid of it. So this is the daily chart with the dollar. Very bullish today, is particularly very bullish. It's almost 0.6%, and it's breaking. It hasn't broken today's goes high. Yesterday high is breaking it to the upside, and I do have a supply right here. So I was saying, if the dollar gets to supply and the markets are in demand, that's a very probabilistic play. And we'll see about that later when we go over the equity markets where we are at. If we go to the lower time frame, we'll see here how the dollar is just squeezing its price to the upside. I do expect this 110.22, 110.22 to work to the downside. That's why I had this alert here. And I think this is a nice setup for the markets to bounce today. They certainly did it yesterday. They went lower and then they bounced. Now the dollar yesterday, we were expecting this thing to continue to go up, right? So then I said, all right, there are different factors that are influencing this thing to go up, and this pivot is one of them, right? This circle. But it failed to the downside, but it created this retest right here, right? So this is the long. If you guys see my recap yesterday, I took a short, but later there was a long setup that we had on the live stream. We had that area on the live stream, and the setup played out perfectly. So we violated the zone, we came back, and then we ultimately dropped from there. Now, today is another story. The dollar is going up quite a bit. The 110 to 2 is being tested right now, and it's working perfectly, right? So there's several things that I see that I look up when one of my zones is being tested, like this one right now. I don't want to see something like this, like a lot of choppy coming into the zone. But when I see these two massive candles, right, coming into the zone, I can expect a quick reversal, right? Why is that? Because all the demands that I play are usually rally-based rallies like this one, right? A rally, it based for a few candles and then it continues to go up. But for me, these two massive candles does not represent any sort of support or demand, right? Hence, I can't expect this thing to continue to go down. Okay, so that's one of the factors that I consider when I'm trading an area. Okay, so if you see this setup, it looks pretty nice for the dollar to turn around today. It looks very massive. It looks very like strong to the upside, right? But things can change, and they can change very quickly. Let's see how the dollars behave. So this is certainly a good setup. If this area fails, because we cannot assure something to work, if this area fails, ultimately this will put some pressure to the upside right here. Okay, so there are two main things that I care about the dollar, and it's its combination with the bonds, right? And when the bonds and the dollars, and when the bonds and the dollars are going up, when the bond yields on dollar is going up, that's the perfect cocktail for a drop in technology, meaning the NQ, right? So I see the dollar going up, and we'll check the rates in a little bit. I see the dollar going up along with the rates. That means that the more likely scenario is tech going down. Now, the dollar hit a level. What happens if the dollar changes? If the dollar changes to the downside, then we have the opposite scenario, a long on the equity markets, right? So the key for today's trading session will be this area in the dollar. If this area works, then the markets will bounce from where they're at right now. I think they're like down like probably 0.5% or something, right? If the dollar starts to go down from this area, then we will have more upside on the equity markets. All right. The bond yields. This is the chart that I was referring on my intro. We finally broke the 3.5 barrier, and we're going higher. Good morning, all. Good morning to all. Welcome back. And this chart is quite scary, and I don't want to show you this. I want to show you that I don't know if I don't have data here, but if I go here to the, so this is the chart for the bond yields, right? And let's go over, let's put it here. Let's go over the bond chart, the US 10, right? This is a 10-year yield bond. Sorry, this is a 10-year government bond. So this is daily. Yeah, this is the one. Let's go over the weekly chart. No, this is not the one, definitely. It's not the one that I'm looking at. US bonds. Well, I can't find the chart, but the important thing here is that the yields have a lot more upside. I cannot show you here because there is data here. It's quite like not reliable, this data. I'm gonna look for the chart for tomorrow's pre-market, but what I'm saying is that we don't have any stop up to 4.4 and we are at 3.56. So if this thing comes to 4.4, that will put a lot of pressure into the markets, right? And I don't have any like high quality supplies. Like I didn't have here, I didn't have here, and we're just going higher, right? My last supply was around here, like 2.8. And we were like putting some pressure there, but ultimately we broke to the upside, and it looks like fundamentally the economy is just pricing these assets higher, right? The rates. All right. So with that being said, let's go over commodities. Crude oil came back to the demand. 82.50. I said I was not expecting this thing to work again, but ultimately is working. Crude oil had a massive come down yesterday from 84. It came down to 81.80, and then closed at 85.40 around there. And we are like basically flat today. We might have to wait for tomorrow. Tomorrow we don't only have FOMC, we do have crude oil inventories as well. The rest of the commodities came back yesterday very nicely as well. All right, so let's go over the ES. The ES came to our supply area. It was a massive supply. It came yesterday at the closing. On the overnight, couldn't like continue to go up, and then we're coming out of the zone. Now we have two important areas. I don't like the supply because of the location, but if we don't manage to come back up from here, I think we will have lower prices in these assets, right? I'm not accounting for this demand anymore, so we can get rid of this. The support right here, I'm gonna leave it. It was barely tested yesterday. If I were to find an area right here, I would say is here, right? We haven't touched it yet, and let's go down to the smaller time frame and see if we can like narrow this down a little bit more. Yeah, I would say this. There we go. All right, 38.77 to 38.63. Now we have the entire momentum of the daily chart coming down. Now these pivots were not sustained here. Buyers tried to go up here and they failed. Let's see if we can push prices higher, and if we break this to the upside, then we will have always watching the dollar. The dollar has to come back from the supply that we have right there. If the supply is broken, then the scenario, if the supply is broken, then the scenario will be something like coming back up here and then a retest of these lows. Okay, so those are the two scenarios. No, that's what I'm talking, Chris. I'm just putting possible scenarios. I correlate everything with the dollar. So I do have this supply, and the overnight high is very important for the ES because it was a supply created a few days ago on the 15th. But I do have some demand that were created on its way up yesterday, 38.77, 38.63. So it's yet to see what happens today. If the dollar just breaks the supply, I do think we have a lot more downside here. But the dollar just touched the supply. Have to be aware of that. All right. Same scenario for the NQ, but the NQ has the demand is still fresh. I mean, not fresh. It was here from Friday, and then we were here again yesterday. So it's not fresh. We've been here for a couple days, but if we manage to break this high, we might have some upside. I repeat, I need to see the dollar reacting from there, okay? I need to see the dollar reacting from there. Same scenario. Now, the NQ, I think the NQ has more room to go up, though, up to the overnight. So we might have something like this. Let's see how these markets open. Oh, you know what? I didn't go over the VIX charts. Should have been this one. So I skipped. So the VIX chart is not giving us much information, to tell you the truth. To be honest, I am very surprised about the VIX. That we have had huge down days, no, like 2%, 1.5%, and the VIX has not broken 28 sustainable. Like we were very briefly above 28, and then we collapsed. And yesterday we had the comeback. It looks like two things: either people do not believe the market will go down, meaning people are not scared at all, or they will be taken by surprise on the markets, right? Those are the two scenarios that I can interpret out of this VIX. It's very, very, very weird. The first time I see it like this. All right, so that's the NQ. Same scenario like the ES. If the dollar keeps going up along with the rates, I will play the short. It's a higher probability here. If the dollar drops along with the rates, then the long here for the NQ. RTY is same scenario, but I think actually RTY has a more bullish look here. Although we came here to all these pivots and we respected them, right? We are respecting them from the overnight. So it's yet to see what is going to happen here. But I do think the RTY has a very good scenario to the upside. Right here. Is the only one that actually touched the demand from yesterday and is reacting off of it. Like if you see the NQ hasn't. The demand starts right here. The ES. The demand starts right here. Okay, so I think the RTY is the one that has a more bullish scenario as of now. Apple. We broke this trend line that we had here, right? This very short-term oriented trend line, but we broke it yesterday, and we are gapping down, not much. I do think if Apple comes to 152 and we hold here around 152 to 150, if we happen to come down here at the market open and we don't break this area, we can have more upside up to 158, and that will mean more upside to the equity markets. But if we break 150, I think that Apple has more room. Like I've said, 144 is my long-term target here, and see if Apple can reach that level. All right. I think I'm gonna leave it like this. I'm gonna be trading live in 15 minutes. 9:25. If you like what I do here, please consider subscribe and like the video. So I'll see you guys all in a few minutes. Thank you.